This is FinTech Insider News. This week, big digital bank IPO news. Chime files to list in New York, while Monzo edges closer to a potential London listing. Ramp partners with Stripe to offer simplified cross-border payment opportunities. And Nordic countries are partnering to develop offline card payment systems for those pesky internet outages. We'll be discussing all of this and more on today's show.
Hey, Fidelity. What's it cost to invest with the Fidelity app?
Start with as little as $1 with no account fees or trade commissions on U.S. stocks and ETFs.
That's music to my ears.
I can only talk.
Investing involves risk, including risk of loss. Zero account fees apply to retail brokerage accounts only. Sell order assessment fee not included. A limited number of ETFs are subject to a transaction-based service fee of $100. See full list at fidelity.com/commissions. Fidelity Brokerage Services, LLC, member NYSE SIPC.
This episode is brought to you by Buick. When you have 4 new tires, every drive feels fresh. Right now, buy 3 select tires and get 1 for just $1 during the Buick Certified Service Fresh Start Tire event. Visit Buick.com/service offers or see dealer for full details. At participating U.S. GM dealers only. Highest or equal value tire will be $1. Offer ends 5/31/2025. Not available with other offers.
Hello and welcome to episode 963 of FinTech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. Now, the top echelon of television and film was celebrated this week at the annual British Academy Film and Television Awards, or BAFTAs, which were held here in London. There were plenty of worthy award winners and much news from the BAFTAs' notorious red carpet. But the most exciting news of the week came from another awarding body, the Golden Globes, who announced the creation of a Best Podcast category for 2026. Great news for us here on FinTech Insider. Who knows, maybe we could be walking down the red carpet ourselves next year. So, helping to elevate us to podcast royalty are this week's guests, the real winners of the FinTech and banking world, who are on hand to dive into the top news stories from the week. First up, we have a FinTech Insider debut for Monika Liikamaa, Chief Executive and Co-founder of Enfuce. Welcome to the show, Monika. Could you tell us a little bit about Enfuce and what the company's been up to recently, please?
Yeah, thank you, and really happy to be here. So Enfuce, we are an issuer processor, and for the past 9 years, we've been really changing the game of how you issue money. So we serve banks, financial institutions, and really much focused on both the banking sector and the fleet and mobility. And I think the past year, we've been really growing steadily. We're also a licensed entity out of Finland, so the Finnish FSA and passported all over Europe. And also last year, we received our UK EMI license to really unlock and enable really great UK brands also to issue cards in both UK and then, of course, expanding into Europe and vice versa.
Fantastic. Congratulations to you and your team, and thank you so much for joining us today. Now, next, we have a very welcome return to the podcast for Jason Mikula, founder of FinTech Business Weekly and head of industry at Tactile. It's always great to have you on the show, Jason. Can you tell us a bit more about what you've been up to since you were last on the podcast?
Yeah, I was trying to remember how long it's been since I've been on here, but I've been doing various promotions for my book about banking as a service, as well as continuing to consult and advise in the space, and spent about 5 weeks working from Mexico City earlier this year, but I'm pleased to be back at home in Utrecht. I'm looking forward to seeing industry folks early next month here in Amsterdam.
Amazing. Welcome back. And we have another welcome back to the show for our very own Dave Morris, Chief Executive at 11FS Foundry. What's going on in your world, Dave?
It's been busy. I'd say first half of the year, but we're not quite there yet. With growing the team out and various things. We're very rapidly running towards our first live customer on Foundry. So that's going to be an exciting Q3 as we go through that and get through that next piece. It's a lot of interesting things going on there, for sure.
Fantastic. Okay, well, let's get on to the news. So our top story this week is some big news about fintech IPOs. So Monzo and Chime are both eyeing up a potential IPO on the UK and US markets, respectively. So Monzo is rumoured to be heading for a potential public listing in London in 2026, depending on market conditions. The bank is said to be working with Morgan Stanley on a public offering that could take place early next year. The company's value soared to £4.5 billion last year, but the rumoured IPO could be valued at perhaps £7 billion, according to banking sources. Monzo is now the UK's sixth largest bank by number of customers and has amassed over 11 million retail customers. Meanwhile, US digital bank Chime has filed for an IPO in the US with Nasdaq. Chime, which has over 8.5 million active customers and employs more than 1,300 staff, was valued at $25 billion following its $750 million Series G funding round held in 2021. So this is a big deal. Jason, I think I'm tempted to come to you first. Are IPOs back on the cards now? We had a time when, fintechs were stepping back a bit, but are they back in fashion?
I mean, I'm getting a bit of whiplash here. I mean, even, it seems like a month, 6 weeks ago, folks were pulling their IPOs, Klarna being one of them. And now all of a sudden, we have Chime filing their S1, preparing to go public. You mentioned Monzo, and also eToro, which is in the brokerage and crypto space. So it certainly appears that some of the anxiety that spiked after quote unquote Liberation Day tariffs, not that situation is behind us, but it seems that things have settled down enough that companies are getting more comfortable with proceeding with trying to take advantage of the so-called IPO window or the ability to, achieve some fundraising and liquidity by going public. So, fingers crossed, who knows these days? Things can change at the drop of a dime, but it seems like this may finally happen for some of these long-suffering fintechs and their investors.
Monika, I'd love to hear your view, perhaps particularly on the sort of Monzo listing in London, perhaps, because there was a story a few weeks ago when Deliveroo got an offer from DoorDash, and there were two companies with similar business models that had been on similar trajectories, and then DoorDash, by listing in the States, just managed to achieve a much, much higher valuation. What did you think of this news? Is this exciting? What do you think?
Yeah, I think definitely it's exciting, and I think it's hopefully a good first step towards us European actually wanting to keep our unicorns in this market, because of course I wouldn't be very surprised if Monzo even would be looking at a dual listing, because the valuation is the gap or the difference is so massive. And also DoorDash, we have our own track record of that with Volt, also looking into going IPO and then actually merging or the acquisition with DoorDash. So I do think that this is a good step forward. And also in this whole era that we've been in somewhat of a downturn because of the war in Ukraine as well. So we're really excited to see positive signals. So really hoping that the Monzo IPO actually takes place and sets a bar and opens the door again for more European IPOs in Europe.
Dave, what was your take on this news?
Yeah, I'm still not convinced it will be in the UK. I think they'll follow where Revolut go. If Revolut go US, I think Monzo might head that way. But I suppose, what are they trying to achieve? If they're going for the bigger valuation, US is obvious. But if they want 11 million shareholders from their customer base, the UK makes more sense, because some of the banks have very successfully in the past gone through listings and things where the UK certainly is a market where people want to be shareholders as individuals in that market. But equally, Monzo's only very, very early into their journey into the US, and if they list there, is that not a massive boost potentially to sort of raise their name and raise where they are, their awareness, so that they can sort of start to expand into that market more? Don't know. It's a difficult one where it's a long way out. If it's 2026, there's a lot going to change. Certainly, things pivot from week to week at the moment with our friend in the Oval Office.
Jason, one of the things that struck me about this was the difference in valuation, right? So Monzo, 11 million customers, potential valuation at 7 billion sterling, so that's about $10 billion. Chime, 8.5 million customers, fewer, potential valuation $25 billion, 2.5 times. Why would Chime be worth 2.5 times what Monzo's worth? And also, doesn't Monzo do a bit more of the back end as well? What did you think?
So, there's a couple of important differences that are worth noting. So, number one is that 25 billion valuation that Chime achieved was on its fundraise in August 2021, which was sort of at the height of the, COVID bubbly fintech mania. So there's absolutely, at least in my mind, and I always like to caveat that I am not an equities analyst. So if I'm wrong, I'm wrong. But in my mind, there's absolutely no guarantee that we're going to see Chime valued in an IPO at or above that 25 billion mark. And in fact, I would be a bit surprised if we see Chime exceed that valuation, right? A point of comparison, albeit an imperfect one, given that the business is different, is, Klarna was 46 billion around a similar time frame, and then dropped substantially to that 8 billion before, rebounding. So that 25 billion, I'm sure that Chime's investors would like to see it match or exceed that, but there's no guarantee that that's going to happen. So that's one. And then two, in your introduction, I think you referred to both of them as banking apps or banking services, but it is absolutely worth pointing out that Monzo is in fact a chartered bank in the UK. It holds deposits. It has deposit insurance in the UK scheme. It makes loans. Chime is not a bank. In fact, I don't know if it's still choosing to describe itself this way, but at one point, Chime specifically was describing itself as not a bank, rather a technology company. Now, there are certainly sort of narrative reasons why one would lean in to that descriptor, particularly to go back to your question when it comes to valuation and valuation multiples, right? Everyone wants the valuation multiples that software companies like a Google or a Microsoft or a Facebook or whatever have. But if you actually look at Chime, I see nodding happening. If you actually look at Chime's business and look at Chime's S1, the paperwork it files in advance of this IPO, it's basically a payments company, right? The majority of its revenue comes from interchange when its customers swipe its debit card somewhere. And then there's some additional revenue that comes from ATM fees, even though Chime advertises itself heavily as no fee. If users access an ATM that is outside of the network Chime is contracted with, they incur a fee and Chime earns revenue. And then Chime also earns revenue from the deposits that are held at its bank partners, the Bancorp and Stride. So to sort of cap this off, typically, investors will commonly value banks as a multiple of price to book, whereas technology companies may be valued as a multiple of, price to sales, price to revenue, price to earnings if there are earnings. And it's worth noting that Chime in 2024 was not profitable. It posted let me see, I have it somewhere here. It posted a loss of about $25 million in 2024, right? So while on the surface, these two companies look and feel very similar and provide similar services, when you drill into what the actual businesses are, there are some very important differences. And those flow through to the valuation that you're talking about.
Thank you. That's a great elaboration. Monika, there are obvious benefits to the people who own Chime and Monzo, the current shareholders from listing these companies. Obviously, they can cash in their investments. Hopefully, if they get the valuations they want, that's great outcomes for them. But for the companies themselves, for Chime and Monzo, what does a listing really bring? It brings more scrutiny from public investors. Does it help? Is it going to help make those companies more successful, or is this really just about the existing investors taking their opportunity?
That's a good question. And based on what Jason just explained, I think it's easy to say that Chime is in for a ride, and Monzo, it should be business as usual. So I think from a Monzo perspective, being a bank, being highly regulated, having these deposits, having Ensor, all of those things that Jason just explained, for them it's actually a outside stamp that you know what you're doing, because the scrutiny will come, but it's also going to help them on the sustainability track, because they will be even more legitimized as a bank. And I think then from Chime perspective, of course, not having any insights, and I'm sure that they're all really good and everything is really awesome, but it's going to be a different game to be reporting. So if I would bet money, if I would bet short-term money, I'd probably put on Chime. But if I put where my actual money goes, I would definitely bet it on Monzo.
I like that. Perhaps I should clarify. This is not investment advice.
No, exactly.
Investment advice.
It's not even advice. It's just thoughts.
Yeah, just our opinions on.
Yeah,
on
exactly. That's the one.
Indeed.
Yeah.
Dave, why don't you wrap this one up? You made a really interesting point about Monzo potentially getting, its customers as investors. Is there something to that of having a listing and sort of trying to get more of your customers to be maybe shareholders?
I can see the value in that, and people buy into Monzo as a brand, as customers and things like that. So you could see actually it's if they actually put it out as with the public offer there and go for a much wider consumer base on that, I can see a lot of people wanted to take up shares. It's almost like a glorified cloud fund to some extent, but certainly I'm very much of the same mind. I think it'll be much less of an impact on Monzo. I think it'd be a very business as usual for them. I think it helps them in the long term. But they're used to that scrutiny of constant reporting, being a bank and things like that. Whereas I think for Chime, that you then go into this cycle of having to report rather than having a longer term view that you can hide behind if you're in that private world. So I can see them having a much bigger hit on them than that. But for me, Monzo, this makes total sense, and they should cash in on their customers on this for sure.
Especially in the States, of course, with quarterly reporting. Okay, let's move on to our next story, which is that Ramp is expanding its partnership with Stripe to offer simplified cross-border payment opportunities. So Ramp, which is a US corporate card and financial operations platform, has partnered with Stripe to launch corporate cards backed by stablecoin. Ramp's platform lets businesses fund wallets using either local currency converted into stablecoins or direct stablecoin deposits. This method ensures faster settlement, reduced fees, and greater protection from currency devaluation, while Ramp's corporate card provides access to its suite of spend management and financial automation tools. Initially launching in certain Latin American countries, the new solution will later be expanded to Europe, Africa, and Asia. Monika, maybe I'll come to you first. I mean, Stripe sometimes seems to be the sort of poster child of fintech, a company that, does lots of things right. How significant a move is this? I mean, Ramp is also quite well respected. Did you look at this news and think, wow, that's a really interesting move? What did you think?
Yeah, I actually did. And it really makes sense for the LATAM market where there is a lot of volatility. So maybe not equally excited if they would have decided to launch it in Europe, but definitely makes sense. And from the business owners, I think all of that, living in that part of the world currently, I think it's going to be a good service. And I also think that they're really trying to nail down the user experience. So really being a service that makes sense and actually makes lives easier. So I do think that will actually have a good impact, and it's two good brands collaborating, and that's always exciting. I really love collaborations because I do think we focus too much on trying to beat each other, and the world is full of problems that we can solve, and I think collaboration is definitely the key. So looking how it's going to go in LATAM, and then of course how it's going to expand maybe then to Africa first, and of course welcoming it to Europe as well. But I think the challenges are not similar in a way. So let's see. Looking forward to it.
I love that point you make about collaboration and companies working together, which is really hard, and we don't see enough of it. So I love that point. Jason, are you similarly enthusiastic about this?
I will say I'm, let's say, cautiously enthusiastic. I mean, whenever I see some of these stories, whether it's cryptocurrency or stablecoin, talking about eliminating friction. We often see talking points around access and inclusion. I always ask the question, is that because there's something fundamentally different and better about the technology versus the status quo? Or is it, regulatory arbitrage and cutting corners on, KYC, KYB, transaction monitoring, other compliance obligations? I think certainly in the international payment space, when you're talking about cross-border payments with correspondent banks, there are plenty of reasons why that is slow and expensive. I mean, living my life across sort of 3 countries, Netherlands, United States, and Mexico, I've certainly experienced that, and the pain that goes with that, both the latency and the cost of going, cross-border and cross-currency. On the flip side, when we're talking specifically about stablecoins, and I was rereading the press release that Stripe and Ramp put out about this, it struck me that they were using specifically Argentina as an example, right? And to Monika's point, if you are a business, or a consumer, and you're in a country with a less stable currency or with high inflation, it's completely understandable why you would want access to a mechanism to preserve your purchasing power. But is what people are really asking for a stable coin, or is what they want a asset that is less prone to losing purchasing power due to inflation in the local currency and local economy, right? Like I don't imagine that person in Argentina or Turkey or wherever cares if it is a USDC stablecoin or a regular fiat US dollar. They just want access to something that solves that problem. And so, I mean, the question I have when I read an announcement like this is, why is what you're building or proposing, possible or easier to do with a stablecoin versus a fiat US dollar? And is this an actual technology innovation that is allowing you to offer these corporate cards in Argentina or wherever? Or is it some kind of, regulatory arbitrage? And I'll admit, I don't have a clear answer to that. So to the points Monika made, it certainly solves a real problem. But is it solving a real problem by taking shortcuts and, avoiding compliance obligations? Or is it truly a technology innovation that is enabling Stripe and Ramp to solve that problem? And at this point, I honestly don't have a clear answer to that.
It's certainly a great question. Dave, I'm not going to throw that question to you. But,
yeah, Dave, the answer.
But do you have a perspective on it?
I think that the cross-border piece is the interesting bit for me, because obviously, it'd be interesting to see, in the US, what percentage of Ramp's actual transactions go off US dollar, which is probably very low. Next to nothing. Nobody leaves the US if you live there. Very few people, certainly proportion-wise. So most businesses don't have international payments in the US, and so it's a natural, for them to expand. As soon as if you want to hit Africa, if you want to hit LATAM, Europe, etc. Massive cross-border there. Because people move money around much more, and there's much more trade cross-border. So that's the big bit for me that was important in this, and I think it's the natural step for that joining that up to give them the route to get into those markets, because without that, that's the important bit that they're missing really, that they didn't really need in their US marketplace to start with.
One of the things that struck me about this was, embarrass myself slightly, because I hadn't realized how global Ramp was. I was thinking of Ramp as primarily an American business or primarily operating in the States, and that may yet be true. I hadn't appreciated the extent to which Ramp was moving into other markets. Obviously, Stripe is well known for operating sort of around the world. So I think, to me, one of the interesting things here is actually not just the sort of stablecoin thing, but also seeing one of the US fintechs really pushing out into other countries around the world, particularly, starting with Latin America and Argentina and so on. I think, Monika, I think that's quite an interesting pattern, because in payments we often see sort of national firms sort of springing up to try and solve the domestic problems, and then the sort of cross-border payments become a bit of an add-on when they solve the domestic problem, and they're like, okay, well, now let's tackle cross-border because, wow, that's really hard. But here we've got Ramp, kind of coming into some of these markets with a cross-border solution. Is that an interesting play?
It is probably for if it's for the right reason. So I do agree with Jason on that if it solves a problem, and in those certain geos where there are regulatory challenges just from the regulator perspective, not knowing maybe how to regulate or what to do, etc. So I do think, and what I'm really looking forward is to actually see how it goes, because what I've then also seen that when US companies, some of them go abroad and they are used to their own currency and their own regulation, and then come to a world that it's very different in the end of the day. Like, that's why I'm very pro card schemes, because I always say that the card rails are the only real-time payment rails, because actually the schemes act like central banks, global central banks, because they set rules and regulation and they clear and settle. So in that sense, it's going to be an interesting thing to watch, and especially in the Latin market and maybe then Africa. But I have personally, maybe not knowing enough, a bit hard time seeing the benefits if it would reach out to Europe. But let's see.
I think everyone's trying to find a cross-border route that doesn't involve SWIFT.
Yes, true.
Yeah, I think exactly. If you can find a way of making cross-border payments faster and cheaper, there's a huge prize there, and there's obviously a large number of companies trying to solve that problem. But I think you've asked the key question, Jason. Is this a genuinely a cheaper, faster, better way of doing it, or is this a little bit of a regulatory arbitrage that maybe helps you skip some element of know your customer or sanctions monitoring? I'm not suggesting it does, but is it? Is that the reason for going via the stablecoin route, that it's some kind of arbitrage? But I hesitate to underestimate Stripe and Ramp. They're two hugely successful companies. So,
one quick additional point on what the strategy here might be, right? If you think about Ramp and some of the other companies in the space, my impression of their long-term strategy is they want to displace the behemoth corp issuer Amex, and who if you think about what kind of companies, particularly what kind of American companies, are using American Express, big multinational global companies. And so for Ramp to be able to effectively compete in that space, if you think about, I'm just making this up, but if you think about whatever, Microsoft or Coca-Cola, it's like they have subsidiaries around the world. And so if you want to win that business, you need to be able to have the infrastructure to meet those multinational companies' corporate card needs globally, not just in the United States. And so the LATAM stuff that we've been discussing absolutely is a meaningful use case. But I suspect there's also perhaps a mid to longer term play on that global multinational use case as well.
Fantastic. Okay, well, let's keep a close eye on this, because I'm sure we will be learning things from what Stripe and Ramp do. So let's keep an eye on that over the next weeks and months. Okay, well, on that note, we're just going to take a quick pause here, and we will be back very shortly.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Anyone can follow. It takes something special to be an original, which is why the 2025 Lincoln Navigator SUV arrives with new ways of surrounding you in luxury, including the ultra-wide 48-inch panoramic display and the multi-sensory Lincoln Rejuvenate experience. A true original never stops evolving. So meet the 2025 Navigator, the original that's all new and better than ever. Learn more at Lincoln.com. Lincoln and Navigator are trademarks of Ford or its affiliates.
Welcome back. Before we get back into the news, we've got something exciting to share, which is that Open Mic Night is coming to Money 2020 in Amsterdam next month at the beginning of June. Fintech Insider host David Barton-Grimley will be there, along with Marcin Glogowski from Marqeta and a bunch of fellow fintech fans as we dive into the state of payments and where things are headed next. We're taking over the Traveller right next to the RAI Conference Centre on Wednesday night. Tickets are free and available now, so if you're heading to Money 2020, hit the link in the show description to grab yours. Not far for you, Jason. Back to the news. And our next story is that Nordic countries are partnering to develop offline card payment systems for internet outages. So Finland, Sweden, Norway, Denmark, and Estonia are reportedly developing an offline card payment system to serve as a backup in the event of internet outages to help deal with the steady rise in cybersecurity attacks. Finland will introduce a national system for instant payments in a few years, while offline payments will be available to consumers as early as next year. While the Swedish central bank is developing a system that will allow Swedes to make offline card payments to buy essential goods in the event of disruptions, which could be available as soon as July. Monika, it seems obvious to come to you first. Obviously, we had those power outages in Spain and Portugal just last month, which reminded lots of Europeans of, what happens if the systems go down? This seems very, far-sighted of the Nordic countries, unsurprisingly. What's your reaction to this story?
For me, it's pretty old news. I think, again, especially as Finns who have this lovely neighbor that we have, the 1,340 kilometer of border, which and we protect the Western world. I would say that offline it exists already. So I think it's more about more firmly making sure that how we've been working and how we have the offline infrastructure for payments, that it actually works in these events of DDoS. I mean, we could see a massive attack surface when the two Nordic countries, Sweden and Finland, decided to become NATO members. And we could see some outages with some of the banks who haven't built the kind of infrastructure that we have because they have the legacy data centers, etc. So I think this is a good news. I think it's, I would say, even old news for us up here, but I think it's good that we talk about it because in the end of the day, it's not about us only wanting to protect, against the Russian cyber attacks, but it's also, of course, making sure that we are self-sustained in the event of data outages, that we have also seen these terrorist type of attacks or whatever you want to call it in a nicer way on the data cables between the countries. And I think for the past 22 years, we have had one outage or problem with an anchor taking up a data cable, and then the last 2 years we have 6 incidents. So it's systematic, and that's what we are building to make just secure on how to work. So it's not about building the infrastructure; it's about making sure that we know how to act if and when the challenges occur. And of course, again, Finland is very far ahead also with satellite companies. We're launching a lot of different type of satellites up to make sure that we have the data coverage in a way that we don't go offline for a long time at least.
It's very hard to believe that ships dragging their anchors in the Baltic and cutting cables is either accidental or being done by terrorists. However, we'll park that. Dave, I've seen a bit of a counter-argument that this is not so much about Russian aggression, but is more about just trying to reduce the reliance on sort of American providers and so on. Is that an alternative explanation for this?
I think there's a bit of both for me. Certainly, you can't ignore the impact that sort of where a lot of these cyber attacks are coming from. It's very clear. You can't hide from that. Russia-centric in a lot of this, and if it is coming from Russia, it's likely to be state-sponsored. And so you have to keep that in mind. But I think there's an increasing view of in quite a lot of regions, and I think it seems to be more and more so in Europe that are we too reliant on big US providers for things, whether that's your Visas, your MasterCards, the Apples, etc. in this, that should we be more self-sufficient? Should we have a more local, regional, European-wide view of this that we can manage without all of these people being at the heart of everything? You see the same argument in the Middle East, where they're trying to do things locally there as well for their own payment networks to avoid SWIFT and other things in that world and things. So it's a I think the volatility that's coming from the US as well makes people think about that too on that side of things.
Jason, what do you think? It does feel like a lot of our critical infrastructure is hugely exposed to state actors pursuing hybrid warfare because these systems weren't built with warfare in mind. I mean, you only have to look at the sort of Russian attack on Ukraine to see the extent to which they're targeting, electrical infrastructure, or, all of the sort of digital infrastructure. Is this just like the Nordic countries waking up to what the rest of the world needs to wake up to? Or sorry, the Nordic countries taking action on what the rest of the world needs to wake up to?
I mean, I think both of the examples that we've kind of been discussing, the threat from Russia, as well as the recent power outage in Southern Europe, illustrate some of those risks and the dependencies. I mean, sitting here in Europe, I imagine we are all used to having very reliable access to electricity, to cellular data coverage, and telephony, right? So it's like in where I live in Utrecht, I can think of one store that accepts cash, that even accepts it. Most stores don't accept cash whatsoever. And so, if you really did have some kind of catastrophic failure, whether that's the result of some kind of cyber attack warfare or some sort of accident or natural disaster, the ability to continue to transact is important. Now, like what is a reliable and cost-effective backup mechanism? I'll admit, in my house, I might have €5, if that. And even if I had cash, I don't know how far it would get me if a vendor or if a merchant is not prepared to accept that cash as a form of payment. So I think the idea of having some sort of offline payment mechanism makes sense. It's also worth pointing out, there are plenty of countries, plenty of regions on this planet where those assumptions are not valid, right? Electricity and internet connectivity. If you look at India's UPI system, and I have to caveat, I have not ever traveled to India, so this is just from reading, but it was designed in a way where that UPI system is able to work without an internet connection through regular telephone service. And so, as with any infrastructure investment, there's like a balancing of like cost and benefit. Like, what is the likelihood of something like this is going to happen? How bad would the damage be if it is? Versus what is the investment cost? Whether that's like a government expense and or private industry expense to build that type of redundancy. So, I mean, I definitely think it's an interesting topic of conversation and something to be aware of. And, you have certain ancillary topics. I know CBDCs were like all the rage 2 years ago on the conference circuit, the idea of having something that is a digital representation of cash that you can use sort of like offline. So, I mean, certainly something to keep an eye on in the high-risk day and age that we live in.
Monika, do you think these initiatives are enough? Because from some of the descriptions, some of these initiatives that sort of sound like they're designed to sort of help tick a country over for a day or two, a little bit like those outages in Spain and Portugal, buying essential goods and so on. And that's great, for a day or two. But what if these attacks, these system outages last for longer than that? Do you think this is enough? Do you think countries need to do more?
You're asking a Finn, and we've been prepared for this for the last 80 years. So I would say, like my son says, this is OPSEC. I could tell you, but then I would have to kill you. But just understand, this is nothing new for us. And again, going old school, like we're the cashless society in the Nordics, and we have all of these things. But, again, currently, I think it's actually what Russia did in 2014 when Putin started attacking already Ukraine. He then wanted to make sure that payments work locally in Russia so that it doesn't go through Visa and MasterCard. So he built the MIR network, which means that it's a dual network. So all payments internally go first there, and then it goes out to the scheme. And that's what we used to have also already in the Nordics. And then many of those country-specific companies that were doing that infrastructure as a service were then sold to Nets, that now it's part of Nexi. But the infrastructure, both the infrastructure from redundancy and backup from the telco networks. I used to be a telco data analyst in the late 90s. So the infrastructure has been there for a long time. And I'm not at all concerned about what would happen. I think now when we talk about it, it's just because there have been actual events, and it's good for the public, especially the younger people, to not freak out too much and understand that the world won't stop. I mean, it's not that long ago we survived COVID and all that full lockdowns, but really understanding that there are different types of use cases. So let's assume that the internet is down. Shitloads of ways to get that going. And as you described, Jason, the telephone, again, being part of building telco network, ISDN, etc. It's simple. We already have those security networks, and I'm pretty sure all European countries have those. So those are the governmental networks that are in case of emergency. So those are trained, tested all the time. So those would be hooked up. I do think that also we want this data sovereignty. We are a bit maybe stressed about the things happening in the US and wanting to build more European schemes. I think the challenge is that look at the open banking world. We couldn't even in Europe agree on the Berlin or Paris way or the UK version. So I don't have high hopes for European functioning sovereign something. But I do think that each country already today has the capability not to fault in the scenario that the internet would be down for a bit longer period. And you can also see in Ukraine, even though they have nuclear plants, how to protect, how to get up infrastructure, how to always make sure, with the Starlink satellites, there are a lot of ways to make sure that things are working. And I do have to say that I'm personally very happy with our infrastructure or also being in AWS, because just the whole way of building it and making sure that you can scale across regions. We have the DDoS attack protection capabilities. I think those are critically important because, as you said, when it becomes, let's say, country attack by a government, it's going to be massive. And as I said, we saw some outages earlier this year with the bigger banks because they weren't able to protect them as well as they probably should, but because of the legacy infrastructure.
Thank you, Monika. This is a fascinating and frightening story for those of us who haven't grown up next to a sort of aggressive state. So thank you. Okay, I'd love to keep talking about that, but we need to move on to our next story, which is that Italy's Satispay is joining Amundi to bring investments to its Italian users. So Italian mobile payments app Satispay has partnered with Europe's largest fund manager, Amundi, which is part of Crédit Agricole, to offer Satispay's 5.5 million users access to a money market fund with 2.24% returns, which is a big jump from the average 0.79% interest on deposits in Italy, making this a big challenge to the established Italian banks. The fund has no minimum investment and allows quick access, giving Italians a way to move quickly from savings to investing. Dave, what's your take on this? Easy movement of money from within an app seems like a slam dunk.
Well,
right?
yeah. So it's a market fund backed piece, but effectively they've set it up as a deposit. An easy instant access deposit account, which if you think in the deposit space, it's a race to the bottom on interest rates, particularly in a market like Italy where the interest rates are so low, to come and be able to compete really hard with something that's over 2.5 times what the typical deposit account sits at from an interest perspective. It's an obvious move to be able to go and do something slightly different in that market and actually get some big returns for customers in that. So it felt like a clever move from their perspective to try and do something slightly different. I don't think they're really pushing people into an investment approach. I think they're just trying to get better returns from something that although it's backed by an investment product and wrapper on it still feels very much like a deposit account.
Yeah, it's a sort of money market fund, isn't it? So effectively, it's a kind of a bond. It's a fixed income thing. We were just talking about the advantages of cash, or the advantages of sort of payment systems that work non-digitally. And Southern Europeans, like Italians, are generally bigger cash users than, let's say Northern Europeans. Jason, is this? Yeah, I mean, do you agree with Dave? This is just a intelligent way of getting a better return, offering a better return to customers?
I don't know if this even qualifies as a take, and I'm certainly cognizant of the relatively lower interest rates, both obviously both for savings and for borrowing in the Eurozone. But every time I actually see just how low those numbers are, it's kind of shocking to me. I mean, even now, still in the US, you can get a high yield savings deposit, so a straight deposit product that's like 4.5%. And believe it or not, I'm looking at a stat that's from about last March, so about a year ago. But Nubank in Mexico was offering a savings account with 14.75% yield. I'm going to guess, I'd have to look it up, but I don't think at any point in my lifetime you could get that interest rate on a vanilla savings product in the United States.
But you know what we were just talking about when we were talking about Argentina, and we were talking about why people might be tempted to a stablecoin.
There are reasons. There are certainly reasons why that's the case. So I know that's not the topic today. I mean, I think to the extent that these sorts of apps or services can make it both lower friction, easier, and more accessible for people to put their savings into a higher yield product. Like it should be attractive, particularly given that we remain in a elevated inflationary climate, and I don't want to say the T word. Lord knows what's going to happen with tariffs and sort of what the impact on cost of living and sort of like macro econ conditions here in Europe is going to be. So to the extent that people can earn a slightly better, yield and have, the safety and liquidity of a deposit-like product, I think that's a plus for consumers.
Monika, do you think we'll see other sort of payments companies looking to do this, looking to try and, I should say, maybe gather deposits and persuade people to, shift their money that's coming in and out of a payments app and move that into deposits? Do we think we'll see other firms across Europe? I mean, obviously, there's some doing it already. Do you think this will become a more widespread trend as sort of payments apps try to get a bigger slice of their customers' pie?
I would say I hope so. Again, I have 4 children myself, ages 25 to 17, 15. So I do think like being in Italy, love the country, but the literacy, especially in finance, I would really hope with the brand of Satispay, with this collaboration, actually bringing this kind of, let's say, saving mentality, because we are living in hard times, and I do personally have seen a lot of younger people being very confused that if we just think back how much you could just be doing this buy now, pay never, to actually shifting the mindset into saving and deposits. So as a parent and an old banker myself, I say this is a positive trend, and I definitely hope more would do it. And I also see that there is an upside, even though very small, on actually saving your money for the rainy day, because it's gonna rain, and it's been raining a lot the past years. So,
well, Benjamin, and to the point you made about other payments firms, doing similarly, Wise, based in the UK. I think I'm a very heavy Wise user. I think in the app, for some, I assume, legal reason, they refer to it as I forget if they call it a rebate or something, and not interest. But they do pay interest at least on the USD deposits held in Wise. And of course, part of what has lifted Wise's earnings is holding those deposits and earning the carry, earning the yield on them. So there's certainly incentives for companies that we might think of as payments companies rather than like a depository or a bank to encourage users to keep funds within their platform, because it also drives revenue for them.
Definitely. I mean, to the point you were making about Chime earlier, that ATM revenue, ATM interchange and card interchange are not enough, and also those rates are not that high. I mean, outside the States, card interchange and ATM interchange is very low, or pretty low compared with the kind of deposits. And it sounds like there's a big margin here between the interest rates that the Italian banks are paying and what that money could earn elsewhere. So anything that helps people make better decisions about their money easily is a good thing in my book.
Well, I can't imagine anyone will be putting anything in at 0.79% when you've got an inflation rate of just under 2% in Italy. So it's dead money that's decreasing every day it's in there.
JP Morgan Chase's checking account is 0, and I think the Chase savings account is like 2 basis points or something, right? At a certain point, it's just like, what do they call it? Dumb money. I mean, that's kind of pejorative, but lazy money.
It's not the putting in; it's people forgetting that it's there,
forgetting to move it,
forgetting to take action, or getting distracted by something else that's going on in their life. That's what it is. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full, which is that Monzo has launched a tool that will help customers to undo payments. Monzo has rolled out this new undo payments feature that lets customers cancel or edit a bank transfer within 10 to 60 seconds after sending. It's designed to help reduce mistakes, like sending money to the wrong person or entering the wrong amount, which nearly 30% of Brits did last year. The tool also adds a brief pause to help prevent fraud, giving customers a chance to rethink before the money goes out. Research shows that 78% of people who made a payment mistake realized it within a minute, so this feature hits the sweet spot. We spoke to Monzo's head of payments, Andy Sacra, to tell us more about the launch.
We've always empowered our teams to create delightful solutions to common problems. This industry-first feature actually came from a hack day. It was built by a very small team of engineers and a PM over a couple of days. There's a culture here of creating delightful moments for customers, and it underpins everything we do at Monzo when it comes to payments, whether that's splitting a bill, getting paid early, instant notifications. These everyday moments all add up to a great customer experience. We've built our tech stack from scratch, and this means our engineers can ship and scale new features quickly. Faster payments might be 17 years old, but there's still room for innovation, and this new feature means that customers can now undo a faster payment in the app if they want to. Behind the scenes, this works because we've built a piece of tech called the money transfer gateway, and that just allows us to hold a payment really briefly before it's sent.
I think this feature is fantastic. It's so easy to type in the wrong digit, the wrong amount, the so-called fat finger error where people add an extra naught to something. So having that opportunity within that first minute, because as they rightly say, you do often realize you made a mistake almost immediately. Having an opportunity to pause that or stop that is absolutely brilliant. And also having that pause also gives Monzo or other banks that do something similar those few seconds to spot fraudulent activity. So I think this is a fantastic move by Monzo. Great stuff. And it gets people talking about Monzo again, which is always good. Okay, let's move on. And finally, a topic we've covered previously, but something a little bit different to end the show that our panelists will hopefully have some views on, which is that Klarna has changed its workforce strategy, abandoning its recent, or seeming to abandon its recent AI developments in favour of hiring more members of staff. So after aggressively pursuing an AI-driven workforce reduction strategy, Klarna now says it's evolving the strategy and hiring customer service employees in an acknowledgement that people often do still want to talk to a human. This comes a year after Klarna's chief executive, Sebastian Siemiatkowski, boasted that the company's AI assistant was performing the work of 700 employees. At the time, the company had trimmed its workforce from 5,000 to 3,500, with further plans to get that down to 2,000. Klarna is now testing a group of employees in an Uber type of setup that lets them work remotely as customer service reps. Monika, I'm tempted to pick on you as the Nordic in the call, and Klarna being a famously Nordic company. Do we think that this is Klarna backtracking? Is this Klarna making a mistake, or was the sort of early story really just to try and get publicity, and this is now just another attempt to get publicity?
Well, I think it's probably all of those. So the answer is probably yes on everything. But I do think that I really like the courage and the boldness, because in the end of the day, AI is a good tool, but that people would only want to be, let's say, transacting with bots. Because in the end of the day, as a heavy Klarna user myself, I really love the app and everything is so easy until it's not. And when it's not, I don't want to be, pissed off by someone who can't give me the answer. So, and also understanding that it's not that I want to talk to someone when everything is awesome. And we're Finns, we don't like talking with people. So that's not kind of why I will be calling. But when I do, I want someone who can listen, understand, and I think still yet today we don't have that advanced AI, probably soon, that have some, let's say, empathy or cultural, biased. So personally, again, as I said, don't like people, would love to have AI, and hi to all of the employees at Enfuce, but still, of course, understanding it's a great tool, and I think that's also the realization from Klarna. And of course, with Sebastian, I mean, of course, it was a bold move being the first saying, screw the having a lot of people. The machine's going to do it better, faster, and more affordable. I really like that. Maybe not there yet. So I do think this is a natural step also on maybe reacting on the customer feedback. So,
Dave, what do you think? Right strategy too early?
Yeah, definitely too early. The AI isn't there to take it over right now. It'll come. It'll take time. But I think it's a bold move to roll back on that. I think the reality right now is at a point where actually people still want to talk to humans, but what you want to do is actually empower them and augment them with AI behind them so that they can cover more people, not remove them completely. And I think that's where we're at today, and that's what a smart move for me will be focusing on is, keep that customer service with people, but augment them and help them with AI behind it, to let them get to the answers quicker. The amount of times that you used to in the old world of a customer service call where you'd wait and listen to them tapping away on things and trying to get to what you wanted and telling you, hold on a minute, the system's slow. You give them power of that and help them speed up and make that more efficient. But equally, you then look at where people have gone pure AI, you get stuck in a loop and not get into something. It's like, how do I get to a human being? Because I want to actually ask the question that's not what's in your view of the world and things like that at this moment. So it's somewhere between those two is where we need to be sitting, I think, for me.
Yeah, as Monika says, it's when it goes wrong, isn't it? Jason, your thoughts?
Yeah, I mean, I think as Klarna was in that run up to the aborted IPO, absolutely, there was a whole slew of stuff that just smelled like a PR play to me, right? Particularly, there was a tweet from Sebastian about how they were going to embrace crypto. And when they actually filed their F1 paperwork, it did not mention crypto a single time. So, I mean, I've been on this ride enough times that I'm a little bit cynical, and it's like the AI thing, there certainly is something there as far as like efficiencies and scalability, but I tend to agree with the rest of you that it's not quite there yet. I think it also, good customer service has the ability to be a differentiator. I'm sure we all spend too much time in airports and on airplanes, and it's like, if you want the absolute dirt cheapest fare, like you can fly Ryanair and it's probably going to be horrible. And if there's a problem, they're probably going to be rude to your face. Or it's like, if I have a problem, I can call the KLM Platinum service line and immediately somebody's going to pick up and they're going to see the ungodly amount of money I spend on airfare every year. And they will try to help me if they can. So it's like, to the extent that you want to use that as a value proposition and a differentiator, I think there's an ability to do that, but it's an investment, and you have to build that capability, and it costs, right? Of course it's going to be cheaper to just have either AI automation or an outsourced contact center in a low wage country. So it's been interesting to watch the flip flop, and we'll see where Klarna lands. I also don't like talking to people, Monika, so we have that in common.
Yeah, no, you're Dutch, apparently, trashing Irish people. So good luck with that. You're in your own.
I'm American, so it's even worse.
Yeah, okay, but then, bye.
Well, unfortunately, that's all we've got time for on this week's FinTech Insider News. It's been absolutely fabulous talking to the three of you. I've greatly enjoyed it. Thank you so much, all three of you. Where can people find out a little bit more about you and your companies? Monika, where can people find out a little bit more about you and a little bit more about Enfuce?
Yeah, I think the easiest is Enfuce.com. And then, of course, on LinkedIn, you will see us posting a lot and trying to really explain the use cases that we do, because we are payment infrastructure and processing is in the heart of what we do. So Enfuce.com, welcome, and thank you for having me here. It was a pleasure.
Thank you. And Jason, where can people find out more about you, about FinTech Business Weekly, and about Tactile?
They can find the newsletter at fintechbusinessweekly.com. There's also a link to my book about banking as a service on there, which I'm obligated to plug. British publisher, by the way. And if they want to learn more about Tactile, that's tactile.com.
And Dave, where can people find out more about you and about 11FS Foundry?
Yeah, on LinkedIn, I'm Dave Morris, and 11FS Foundry is on LinkedIn as well. We're just launching our new website over the next couple of weeks, so that'll be on foundry-os.com.
And as for me, Benjamin Ensor, you can find me on LinkedIn. So thank you all so much for listening to today's FinTech Insider. If you've enjoyed it, please make sure you follow on your favorite podcast platform of choice. And please do recommend us to your FinTech friends. If you want to join the conversation, seek us out on social media. Just search for 11FS or FinTech Insider. And don't forget that open mic night coming up at Money 2020. Thank you all again, and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.